What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. In today's episode, we're going to be talking about a paradox that's got me thinking about what really drives success in this market. Picture this. On the one hand, you have Li Auto, a company that's literally attracting a lot of attention and got a lot of people talking because they spent 2 billion yen to redesign a car just because their first pure electric vehicle looked weird. On the other hand, you have Leapmotor, a company most people can't even recognize on the street, quietly crushing everyone else in sales while building cars with their plastic squeaking interior. This is the perfect case study of two companies competing on two completely different philosophies in the same market and ultimately, obviously, producing different results. Let's start with Li Auto because this week's story reads like a corporate thriller. July 29th marked what is easily their most expensive product launch in history, not because of the marketing budget, but because of what it took to get there. The i8 launch event, usually Li Auto does 45-minute presentations, but this time Li Zhang said we're doing a movie-length presentation, 90 minutes planned, 115 minutes actual. When your CEO compares a product launch to a movie, you know the stakes are high. But where it gets interesting from a business perspective is that the i8 is priced at 321,800 yen to 369,800 yen. That's about 30,000 yen lower than the original pre-sales pricing. More shocking, it's basically the same price as their extended range L8. Now, industry standards say that pure electric vehicles should cost more than extended range vehicles because of the battery. Look at any competitor. Pure electric versions typically run 30,000 yen higher. Li Auto said forget industry standards, and they're essentially selling their pure electric vehicles at the same price without the cost increase. This isn't just aggressive pricing, it's desperation pricing. And I get it, the mega disaster still haunts Li Auto. That car became, in Li Zhang's own words, the biggest smear campaign in automotive history. So when they were designing the i8, originally it had the same sci-fi mega tail design. The backlash was so bad that they redesigned it to look more like a traditional SUV. That single design change? 2 billion yen. Let me repeat that. They spent 2 billion yen essentially on plastic surgery. Their first design was too radical for Chinese consumers. From an investor standpoint, this tells us something about Li Auto's position. They're not innovating from strength, they're course correcting from weakness. When Li Zhang admits the i8 was a bit too ugly when he saw the first few photos, that's not the confidence of a market leader. That's the humility of someone who's been humble. Li Zhang dropped this line: supercharging pile is the most expensive configuration of the Li Auto i8. Think about that for a second. They're not just selling you cars on specs, the interior luxury or AI feature. They're selling you on the infrastructure. 3,000 supercharging stations, 16,000 charging piles nationwide. Mega owners average under 15 minutes charging time. This is Tesla's playbook from back in 2015. Build the infrastructure, create the ecosystem, then become inevitable. Li Auto is now betting that China's pure electric vehicle champion won't be determined by actually the best vehicle, but by the best charging experience. They're even testing automated charging robot arms. Imagine pulling up and never leaving your car while it charges. That's not just convenience, that's status. That's I drive a car so advanced it charges itself. Now, from a financial perspective, this is pretty fascinating. Infrastructure requires massive upfront capex, but creates incredible switching costs. Once you're used to Li Auto's charging system, moving to a competitor will become painful. It's the razor blade model applied to EV. But here's the risk. Infrastructure is expensive to build and it's expensive to maintain. Tesla's proved it works, but they've had the first mover advantage globally. Li Auto's playing catch up in a world where NIO has the battery swapping advantage, and new players are emerging monthly. Now let's talk about the elephant in the room that nobody's talking about. Leapmotor. And I mean it, literally nobody's talking about them, and that's probably why they're winning. June 2025 numbers, Leapmotor delivered 48,000 vehicles. Li Auto 36,279, and that's with a 24% year-over-year decline. Leapmotor's first half of 2025 over 221,000 vehicles. That's up 156% year-over-year. They're not just beating companies like Li Auto, they're lapping them in terms of delivery. But here's the paradox that fascinates me as someone who studies business models. Leapmotor has achieved the highest sales amongst new businesses while actively doing almost nothing on social media. No fanboys, no brand evangelists, owners complaining about plastic squeaking in forums online, yet people keep buying these cars. This violates everything that we know about modern brand building. In 2025, you're supposed to need social currency, community, and viral marketing. Leapmotor said, forget all that. We're focused on one thing: value perception. This strategy is simple. They call it the half-priced Li Auto approach. The C16 competes with the L8 but costs under 190,000 rent. Same features: refrigerator, color TV, large sofa, half the price. It's like they took every Li Auto feature, ran through a cost optimization algorithm, and asked, what's the cheapest way to deliver this experience? But here's where the Leapmotor story really gets interesting from an investment thesis perspective. In 2023, Stellantis, the world's largest auto group, invested 1.5 billion euros for a 20% stake. That's not just money, that's credibility. Suddenly, second-tier suppliers who couldn't get favorable terms with BYD or NIO are offering Leapmotor extended payment terms, even delivery first payment later arrangements. Why? Because Stellantis backing means reduced credit risk. This created what I call reverse expansion. Instead of competing for premium suppliers like CATL, Leapmotor aggregated all the suppliers who lost out on the bigger players. Think about it: marginalized battery manufacturers, component suppliers, all squeezed out by the majors. Leapmotor became their lifeline, and in return, they got major cost advantages. It's like creating a parallel supply chain ecosystem for the underdog. And in 2025's brutal price war environment, being the cheapest high quality option isn't just strategy, it's survival. Let's talk about the numbers, because this is where both stories get really interesting. Li Auto's June sales, 36,279 units, down 24% year over year. First half of 2025, just under 204,000 vehicles, only 34% of their revised 640,000 target. They've already lowered guidance from 700,000 to 640,000 units. That's not optimization, that's damage control. Leapmotor Q1 2025, 87,000 vehicles delivered, over 10 billion yen in revenue, 14.9% gross margin. They're approaching profitability, only the second new force after Li Auto to even get close. But here's the catch, and this is crucial for any investor considering the space. Leapmotor's margins are actually declining slightly despite them achieving more scale. That suggests that their extreme cost compression model is hitting its limit. You can only squeeze suppliers so much before quality suffers or relationships break. Plus, a significant portion of their recent profitability comes from export orders through the Stellantis joint venture. That's not recurring domestic demand, that's one-time international arbitrage. Both companies are betting heavily on AI as their next competitive advantage, but in different ways. Li Auto unveiled their VLA driver model and the ideal classmate intelligent agent. The VLA makes assisted driving more human-like, so you can literally tell your car where to go with voice command. And the ideal classmate can scan QR codes to pay bills, order takeout, think autonomously. This premium AI positioning is selling intelligence as luxury. Li Auto restructured their entire organization around this and is creating a new smart car group with Li Zhang personally overseeing the AI strategy. Leapmotor's AI approach: practical features at mass market prices. They're not trying to create the smartest car, they're trying to create the smartest value proposition. From an investment perspective, this represents two fundamentally different bets on consumer behavior. Li Auto believes Chinese consumers will pay premium prices for luxury AI experiences. Leapmotor believes Chinese consumers want AI features but won't pay a premium for them. So let's sum things up, because in reality I think that both of these strategies can coexist, but probably not indefinitely. As the Chinese EV market matures, we'll see a consolidation of about 4 to 5 major players in the near term, each serving different segments. My read is that Li Auto's infrastructure bet is smart, but expensive. If it works, they'll create a Tesla-like moat. I don't think anybody has a better infrastructure moat than NIO, though, when it comes to China. But for Li Auto, if it doesn't work, they've spent billions on assets that competitors can replicate. Leapmotor's strategy is efficient for current market conditions, but it faces sustainability questions. Can they maintain cost advantages as suppliers begin to consolidate? Can they build brand loyalty without premium positioning? For broader EV investors, both strategies highlight the same truth. The Chinese EV market is becoming too sophisticated for simple EV growth plays. You need to understand specific positioning, supply chain dynamics, and proper consumer segment targeting. Here's my take. We're coming to the end of a rising tide ends all boats wave and the beginning of the May the best strategy win phase. So that's going to be it for this episode of the Courtside Financial Podcast. I hope I was able to broaden your perspective, educate you on some things going on in the market, things that aren't being talked about. If I was able to make this video informative for you, entertaining at the very least, make sure you, or educational, make sure you hit the subscribe button, click the notification bell icon, hit the like button, leave a comment down below, share the video. All your engagement really does go a long way in helping out the channel. You guys hitting that subscribe button is directly feeding into the growth of the channel, and it costs you absolutely nothing. Anyways, this is Obi signing off. I'll see you guys in the next episode of the Courtside Financial Podcast. Thank you for sitting here with me and joining me through these stories today. See you guys later. Goodbye.